I'm Derek Eyring. I've been in the real estate business for over 3 decades. I'm an entrepreneur at heart, and I'm always paying attention to real estate trends, industry innovators, and business influencers.
I'm Alan Smith. For over 25 years, I've helped buyers and sellers with their real estate needs. Join us on this podcast. Let's talk about strategies to help you play this real estate game to win.
Join us as we search out the latest trends, hot topics, red flags, and deal breakers in every episode of Market Movers. We're rolling, Alan.
Hey, it's that time.
We're
once
always
again.
so surprised when
know.
we're here again. You know, these months come by so quickly.
Yeah.
And we're back, and we kind of have a head full of things to talk about today. We're going to do our kind of semi-annual red flag deal breaker. That's sort of a composite of all the things we've talked about in the last 6 months that are sort of like things that mostly for agents that agents should look out for, right?
Yeah, things that pop up in routine transactions, then they pop up more often than not.
Yeah.
And so it kind of sticks in our mind that maybe we should be discussing this. So we talk about it in our office meetings all the time.
Yeah, and people like, the good part about that is it just happened, it's fresh on our minds, and we can sort of relate it to what's happening with our actual people in our office, and that's always better to convey a good story and a lesson usually, right?
Yeah, exactly. Yeah.
But one thing that came up this week in our meetings, because we're talking about opportunities and also just obstacles in our business, and one of the opportunities that we kind of identified as something that we're all missing out on is really like talking about buying a house for first-time home buyers, whether it's a young person or somebody just getting into the market. And I just don't, what came up is we just don't do a good enough job as real estate brokers of letting people know that it is possible, because there's just this overriding narrative right now, and I don't blame people, that the prices are too high and the rates are too high, which, by the way, today the Fed just announced finally that we're going to get a rate drop, and it's already sort of baked into the cake, but that should push them down even more. We're in almost 6 now.
Yeah, well, there's a good sign. There's a light at the end of the tunnel.
Yeah,
they're actually
yeah.
starting to make movement and trying to get some things on a different path.
Yeah, so that's going to be good. I think the buyers are going to come out. We have an inventory. We have a good amount of inventory right now. We might be in the perfect zone for buyers, especially new buyers. There's been more affordable property. So we got to do a better job of just talking to people like our kids. So you have your 2 kids now, both of them have bought a house.
Yeah, and part of it was, one thing I realized is both of them had a lot of questions about the house buying process. And I've been doing this for a long time, and I did not do a good job of telling them how the real estate world works and how you buy a house and all that. So that's on me.
Yeah.
But then if my own kids have a lot of questions, and they were very good questions, then I'm wondering, okay, how many first-time home buyers out there don't have somebody, a go-to person they could ask a question to and really trust the answer? And so as real estate brokers, I think it's on our shoulders to do a better job of telling people, what are the possibilities? How much do you need down? Back in the day, my grandparents used to tell me, oh, you got to have at least 20% down. And that's still the going thought. Now, if you have 20% and you can put down on a house, great. You're setting yourself up for a nice equity position.
Right.
But there are so many loans out there that are have down payment assistance programs. There are, it's 3.5% for FHA loans. There's some conventional loans out there at 3%. So, but
Our VA buyers can buy multiple units with 0 down.
Yeah.
There's all sorts that are disappearing, the DPA loans with the disappearing second. So if you live in the house long enough, the money that the DPA loaned you goes away.
We just talked about one this morning in the meeting, a 5-year, if you stay in the house for 5 years, it's poof. Gone.
Yeah, so we got to do a better job. And speaking of which, our fearless podcast producer, Riley, come around here, Riley. We're going to break the fourth wall.
There we go.
Riley, my son.
Yeah.
Very handsome.
Well, I was going to say, about time we get some handsome mothers on this
right.
thing,
It skips a generation.
Yeah.
The good-looking one every other generation. So here he is.
Come on in, right in the middle. There you go.
So Riley, you grew up around real estate. Mm-hmm. Your understanding of how to buy a house. not there, right?
I have no idea.
I failed.
There's
Right?
there's
I
a down
bet, yeah.
payment, and then you can do a fixed year, a 30-year, or a 15-year, depending on how much you want to pay.
Yeah. Okay. So he's
Yeah.
got some of it down.
And I know there's options for if you want to do like a lower percent, but pay longer. I don't know.
Right. Put less down.
Yeah.
Less down. You're gonna pay more. That sort of thing. Or you can do a 15-year mortgage and that sort of thing. But we never really got through the nuts and bolts. I kind of think it's like being a passenger in a car ride. When you're a passenger in a car ride, there might be a lot of things going on with the driver. You're driving to your destination. The driver knows exactly where they're going, but the passenger isn't really totally paying attention, right? Because it's not on his radar when he's 12 and he wants his Xbox, right?
Right.
I still want mine.
I want my Xbox.
Yeah, but now it might be a little more on his radar, and so it's up to us to kind of give him the directions, right? Yeah. So thanks for just chiming in, because I wanted to tell on myself, because I know that I never really kind of sat down and said, okay, here's what we need to think about when you're in your maybe mid to late 20s. Here's some money things that I learned along the way, because God knows when I was his age, I was really bad with money, right? And we learned by making a lot of mistakes, you and I, because I don't think you probably didn't have anybody to teach you about money.
No.
I didn't either.
No, I didn't come from that kind of a background.
So we're going to work on that, right? But thanks for letting me tell on myself.
Yeah.
Really. And if you need a great podcast,
There you
he's the
go.
guy.
There you go.
Yeah, so we just want to bring that up. So if you're a real estate broker, start focusing on that. There's a lot of people out there that just don't understand the process, and let's try to move that along a little bit.
And help them with the possibilities. The possibilities that are out there. Let's figure out how we can do this, what it looks like, and then go from there. So.
Yeah, because it kind of breaks my heart when I hear young people say, or I'm sorry, I keep saying young people, because first-time home buyers run the gamut.
Right.
But when I hear people say, I'm never going to be able to afford to buy a home.
Yeah.
When rent is,
Rent's
really
not
high.
any cheaper.
I say get yourself on the property ladder as soon as you can. And just putting myself in Riley's shoes, what I would do. Riley went to college at the University of Portland. He rented a house from a guy who owned a ton of houses in the area, and his business model was he started with nothing. He bought houses with unfinished basements, so dilapidated old houses. I think he didn't really fix Riley's up too good, but it was all right. And so he would fix the basement up and make that a rentable space, and then he could live in the top and rent out the bottom. So that's just one idea. Or he ended up renting by room, and he would get as many rooms as possible. In Riley's case, he had like 5 or 6 roommates. Six at like $780 a pop, which for one person was reasonable. And then over time, I imagine, as you kind of can afford it more, you can start dropping roommates, right?
Sure. And then you just find
your house
another
back.
property, and it's rinse and repeat.
Yeah. Yeah. So there is a way. You just have to be willing, right?
Right.
It's your motivation level, and we'll try to do a better job of getting that out there.
Yeah, so if you are a buyer, first-time buyer or second or third-time buyer even, don't get caught up in the naysayers of doom out there. It can be done. People are doing it every day. Get a hold of a broker you trust. Get in the hands of a good lender that you can trust, and see what the possibilities are. You may be surprised.
Yeah, and right now you might be in the center of that Venn diagram where you have good interest rates and the prices have been suppressed a little bit. This is my Venn diagram.
Nice. That's a good diagram.
Nice.
Yes.
So right in the middle is where we're at right now, I think.
Yep.
And it's not going to last long. It'll go one way or the other. I don't think the rates are going to go up anytime soon as they're trying to stimulate the economy, but you might have prices go up.
Yeah, that's always a possibility.
Yeah. So with that said, let's move on to red flags and deal breakers.
Okay.
The last 6 months, we picked out the top 4 or 5 things that just seem to be coming up over and over again.
First one that we thought about was financing. Buyers will oftentimes change lenders in midstream or change the type of loan program that they are going with.
And let's talk about usually why. It's because they saw an advertisement, right, on the internet.
Yeah, if you've been quoted a number and then you see an internet ad for a tenth of a point lower than that.
From Sprocket Loans.
Or from Houdini's House of Home Loans.
Yeah.
Now you see us, now you don't.
Yeah.
So just be aware that there are closing costs associated with loans, and there are a lot of moving parts in the lending world that lenders could speak to much better than I could.
Yeah.
But depending on your MLS, if you're a real estate broker watching this, we are all members of the Northwest Multiple Listing Service, and our paperwork specifies that the buyer can change their lender as many times as they want within a specified period of time, and the default on that paperwork is 5 days. So within the first 5 days of mutual acceptance, they're allowed to change their lender as many times as they want to find a good lender. Now, that's assuming no one has countered that date. Let's just pretend it's 5 days, but a seller could say, no, I'll give you one, right?
Right.
Let's just go with the 5 days, that's the default. But then it also states that you can't change your loan type at any time. In order to do those two things,
So what's a loan type for people that don't know?
conventional loan, FHA, VA,
Okay.
whatever kind of loan, you made a promise to the seller that you were going to put this kind of loan in place, and you got an approval letter from this lender. So if you want to change those things outside of the allowed timelines, then you have to get the seller's permission first.
Which makes sense. So let's say you had 3 offers. You represent the seller, and one was a 20% down conventional,
Right.
and you took that over a couple others that were less down, or whatever the case may be, or the terms weren't as favorable, and then they change it to a 0 down or a
Right.
minimum down, which means they have less skin in the game, right?
Right. So in other words, you presented your offer a certain way, and now you're changing the rules behind the scenes.
Yeah.
If you get the seller's permission to do this, then you're okay. But the way the rule states in our paperwork is you have that 5-day period to change lenders, but you can't change your loan type at any time without the seller's written permission.
Makes sense.
If you do that without the seller's permission, then you waive your financing contingency.
What's that mean, Alan?
Well, that means if your financing doesn't go through, you can't use that as a valid reason to exit the transaction. So your earnest money is at risk.
So I can't get out on financing. It wasn't approved, so I want my earnest money back.
Yeah, so normally the financing addendum is there to protect the buyer in case something unforeseen happens with their finances and they no longer qualify. Well, that's off the table now. Also off the table is their protection if the appraisal comes in lower than asking price. So normally they're protected in that circumstance too, but they're waiving both of those things just by not following the rules.
Right.
And I know that a lot of buyers don't know that language is in that financing addendum. I bet you there's some brokers that haven't read it thoroughly. So be aware of that.
Yeah.
Because waiving your financing is not a good thing if you're in the buyer's position.
Yeah, now, in this case, now, oftentimes it's the broker who isn't aware, at least they're in an office where they didn't get adequate training, whatever the case may be. I can't imagine that you would miss that, but it happens.
Yeah.
But in this most recent case, it was the buyer, and that's an interesting story. So the buyer is buying a $2 million house, and it's not our client, it's the other party. And it turns out that the buyer changed their lender without telling anybody.
Including their own
Real estate
broker.
Yeah. So the broker goes to call the lender to say, hey, how's it going with the loan? The lender's like, I'm not doing that loan anymore. Oh, can you imagine their surprise?
Yeah.
With $20,000 earnest money on the line.
Right.
So buyers, you got to be careful. Before you do something, you got to talk to your broker.
Talk to your broker, and if you're a broker, know what your paperwork says.
Yeah.
Just know what the rules are so that you're staying in compliance and you're not causing your buyers any harm.
Yeah, so that's a real important one. I'm glad you addressed that one because it keeps coming up over and over again. All right, so the next one is late earnest money deposits. Let me tell you this, folks. Earnest money is the holy grail. If you're a real estate broker, if you're a buyer, you're a seller, and if you're the Department of Licensing.
Yes.
Reviewing files when they come into your office every couple of years and do a random audit.
Right.
First thing they look for is, are your earnest money deposits done on time?
Right.
right? So if you represent the buyer, you have to make sure that the earnest money is in on time. If you represent the seller, you sure want to know that the buyer's earnest money is in on time. That's our duty as brokers.
Yeah, and so the responsibility falls on our shoulders as the real estate brokers to make sure that deposit happens. Now, it can be done a lot of different ways, but the bottom line is when you submitted your offer, you said you would deposit your earnest money with escrow in a certain number of days. And so you just need to sit down. I think a lot of times where people make mistakes is they get so excited that they have something under contract.
Yeah.
They don't sit down and take just 5 minutes with a cup of coffee and plot out what all your due dates are in a simple calendar or your phone or whatever system you're using to track your weekly schedule. So get those dates put down and then know what your deadlines are. And the reason the earnest money deadline is so significant is if the buyer misses that earnest money deposit deadline, that's the first opportunity the seller has to terminate the agreement because the buyer's in default.
Yeah.
And so it's not very often that a seller has that kind of leverage.
Right.
But basically the thought here is, hey, we just started a relationship 2 days ago and you're already breaking the rules. So you're out of here. And the buyer has no recourse to that.
Yeah.
The seller can just say, I'm terminating the agreement. So you want to be very careful that you're not causing your buyer harm just because you forgot it was 2 days and you thought it was 3. Sit down, take a moment, get all your dates put down on a piece of paper so you can get them plugged into your system so you know what your deadlines are.
Yeah, it's usually a real bad sign if the buyer can't get their earnest money deposited on time, if that's the beginning of the relationship.
Yeah.
We're still in the dating,
Yeah.
the dating part of the relationship. We're not getting married yet, and you're already breaking the rules.
Yeah, well, I remember I got a call from escrow that the buyer's earnest money check bounced.
Yeah,
That's
happened
not a
before.
good feeling.
Yes,
So,
yeah, it
yeah.
makes you real nervous, right?
Yeah.
Everyone gets puckered up there.
So once again, know what your paperwork says so that you know how to protect your clients.
Yeah, and remember, brokers, ultimately, we are totally responsible for that deposit. So if your buyer says, yes, I'll take it down and to escrow and get it deposited right away, we can't say, okay, that's cool. We have to track it. We have to make sure it's done on time. And it's our duty, if it's not deposited in a timely manner, it's our duty to notify all parties.
Right.
So if you do that, the DOL will be fine.
Sure. Everybody acknowledges it was
Right.
deposited a day late.
Yeah, and generally that's what happens. It gets deposited a day late. We produce an addendum that says everybody's aware of this, and we move on and we keep going. Right?
Well, because that's the proof the DOL needs to see that says, okay, the seller is aware this happened, so they were probably aware that they had an opportunity to terminate this agreement. And
Yeah.
so as long as they know that this happened, we're okay, and everybody agrees to it.
Yeah, and I don't want to beat a dead horse here, but it's so important. So we've had two things I can think of over the years that happened with earnest money. One was our broker represented the buyer. The buyer was the broker's brother. This was 20 years ago. At the time, it was $1 million house, which 20 years ago was a lot of money. Right now, it seems to be just kind of average. And the brother said, yeah, I'll get it deposited, gets up to the closing date, backs out of the deal, never deposited the earnest money. The seller is very upset, turns our broker into the Department of Licensing. Our broker loses their license for a small period of time, has to go get re-educated, et cetera, et cetera. Yeah. The other story is kind of similar. Our broker produced a copy of, this used to happen a lot in transactions. You would send a copy of the earnest money check. In other words, I got the check, here it is. We don't do that so much anymore because there's so much scamming.
You're sending it over with the offer?
Yeah.
Here's a picture of the check, okay.
Produce the
right.
picture of the check, and then it was a very quick inspection time period. And so the buyer, before they deposited the check, already had their inspection. And we represented the buyer. And they wanted out of the deal because they didn't like their inspection. So they never deposited the earnest money, sent a rescission, and for whatever reason, the seller decided that they didn't like that they're terminating, that they thought that the reasons, even though they had every right to, were thin. And then they discovered that the earnest money wasn't deposited, so they turned our broker in for not depositing the funds. And even though they showed that they had the check, right? So that was sort of, they felt like that was...
The check probably led them to believe it was already done.
Yes, yeah. So, and the Department of Licensing kind of didn't like that either. So this was also a very long time ago,
Yeah.
but still lessons to learn, right?
Right. So just watch your timelines and know what you're getting into and how best to protect your client, whether you're on the seller side or the buyer side.
So remember, the holy grail is
The holy
earnest
grail.
money. So when your office gets audited, the auditor looks for earnest money deposits first and foremost, and all the I's dotted and T's crossed.
Exactly.
And then if they find a bunch of those that aren't deposited in a timely manner, then they'll go from there.
Yep. So I've got a question for you.
Okay.
We added some language to, circling back to the financing world, we added some language to our financing addendum a while back that allows the seller, after a prescribed number of days, and the default is 21 days.
I know where you're going with this.
It allows the seller to serve a notice on the buyer asking them to waive their financing.
Yeah.
So the default is 21 days, and there are a lot of brokers out there that on that 22nd day, they're sending out a notice asking the buyer to waive financing, and you still might be a week or two from closing.
Yeah.
So what are your thoughts on that? Because I see it from both sides of the table, right? But what are your thoughts on that? I'm just curious.
Yeah, I have mixed emotions. Okay, so here's the scenario where I don't like it. I represent the buyer. The buyer has performed. The buyer is on it with their financing. They got approved right away. The appraisal's done. The lender's committed to the loan, fully approved. The earnest money has been deposited in a timely manner. The buyer is getting ready to close. The docs are about to escrow, and then we get a notice that you either have to waive your financing or they can terminate your deal.
Right.
Buyers are sometimes very insulted by this.
They
Hey,
can
we've
be.
done everything you've asked
Yeah.
us to do, and now you're monkeying around with this.
Right.
We're busy running around trying to get our house closed, not deal with your, nonsense.
Right. And from the buyer's side of the table, something unforeseen can happen. All of a sudden your company decides they're moving to Poughkeepsie.
Yeah.
And so your job ends in 3 months. Well, maybe
Right.
your financing is now in jeopardy, right? So there's waiving financing, to go back to our earlier point, is one of the worst things a buyer can do, in my opinion.
Yeah.
Because there's just so many unforeseen things. And so from the buyer's perspective, it does leave a bad taste in your mouth when you get
Yeah.
this seller that all of a sudden is asking you to do this.
But we're seeing a new wave of listing brokers usually on teams, where it's their office policy to
Yes.
do this.
Or there's a transaction coordinator that has
Yeah.
it on the schedule and it just automatically goes out. They don't have any feeling for how this transaction has been going.
Right, and it's just our policy, and they kick this out, and sometimes the broker doesn't even know when they're doing it.
I would guess that's
They're
true.
they're
yeah.
generating paperwork
Right.
that neither broker has actually put their hands on and their eyes on, which
Yes.
I think is not. It doesn't sit right with me.
No, well, we're much more hands-on in our offices
Yeah.
as far as helping our brokers individually, but
Yeah.
a lot of brokerages take a different approach to that. It's just kind of a hands-off thing.
Boy, yeah.
But I don't like that approach either. So as a buyer, that leaves a bad taste in your mouth. Why would a seller want to do that?
I almost made your own case for it when you were talking about, well, anything could happen right before closing. And if you're a seller, you could say, well, yeah, anything can happen, but I want to make sure one thing that doesn't happen is that if you skate out at the last minute, I want to at least have you waive your financing so I can get your earnest money.
Yeah. And so the thought here is that, the seller's taking their house off the market for this buyer. They've said no to all these other potential buyers, and now the buyer leaves because of a financing reason. The seller might like to feel that they're entitled to their earnest money for their time and trouble.
Yeah, and I
Because
understand
now
that.
they've got to start all over. So I can understand that perspective
Yeah.
too. Our paperwork, and again, if you're out of the area, double check what your paperwork says, but our paperwork says that if the seller serves that notice, the buyer has a choice. The buyer can say yes or no. They're not obligated to waive
Right.
their financing.
Yeah, they're
And
not
if they
on it.
say no, we're not waiving our financing, the seller has the option to then say, okay, at least we tried, we still want to play the game. Or the seller can then
It
serve
can be a
notice about
poker game.
terminating.
It can be a poker
It can
game
be a
right
little
there,
bit.
right? Yeah.
And so a lot of it I find is all about the relationship between the buyer and the seller,
And the
which-
listing broker and the selling broker.
which is actually the listing broker and
Yeah,
the selling
yeah,
broker.
yeah.
Because buyers and sellers rarely meet each other.
Yeah, exactly.
So if buyers and sellers are doing this, it's because the brokers probably started it.
Yes.
And they're saying
Yeah.
silly things to their client, like, "Oh, I can't believe they're asking for this. This is ridiculous."
Yeah,
and they're
yeah.
triggering their
I know
client.
we talk about this all the time, Alan, but it's so important to continue to really reinforce. Keep your emotions away from your clients, right? You
right.
know, we have to be the level, calm person.
Right,
And because it can create so many problems in a transaction that aren't necessary.
right. Yeah, no, and when you think about it, who would want to sell their house to someone they don't like?
Right.
Nobody.
Nobody.
So don't create a situation where you're causing them to not like
Yeah,
each other
yeah, yeah.
because it's the personalities of the brokers getting
Yeah, I
involved.
can't believe what this buyer's doing. You know.
Yeah.
A lot of times that's just because we're not able to really articulate things well, so we just kind of pin it on.
We're positioning ourselves and puffing ourselves up
Yeah.
to look important because
Yeah.
we would never ask for that.
Yeah, that too.
You know, that kind
Yeah,
of thing.
yeah,
So,
yeah.
Yeah, so anyway, on that financing waiver, think about it. Which side do you represent? And do you want to pull the trigger on that or not? But just know what your paperwork says.
Yeah, and then and then go play poker.
Yeah, there we go. There you go.
Okay, the next one. You want to say it, or you want me to say it?
Okay, if you're in Pierce County,
And for you people in rural-ish areas, not necessarily, but kind of.
if you are on a septic system,
What's a septic system, Alan?
it's a place where you put all your poop, and it stays in the ground until it eventually leaches out.
I just go it
into-
off of my back deck.
Well, that can be done in rural areas. I know I live in one. So Pierce County in the state of Washington has an additional step over and above the inspection and the pumping of a septic tank, which is very common in every real estate transaction. Pierce County has an additional step where a county inspector will come out and inspect the site. And they're looking to see, okay, was this thing really dug up and inspected? But they're also looking for signs of surface sewage.
I was going to say, what did they really do? They drive by, they unroll the window, and they do a little sniff.
Probably. Or,
Is there any flies around here?
and I'm sure that the amount of money that's spent for this service is well worth it. However, just know that you're adding a deadline, or you're expanding your timeline a little bit.
Yeah.
Because as the day of this recording, Pierce County is pledging that they're on a 10-day timeline,
Which is very fast for them. When things were real hot, how long was it?
4 to 6 weeks.
Yeah, 4 to
Yeah.
6 weeks.
So right now, I have a transaction. Today is day 13, and we don't have the report of system status yet.
So Pierce County, bad boys and girls, you're not hitting your goals.
Not hitting your goals. Now, in all fairness to them, they had over 80 applications in
yeah,
the pipeline.
for
You can
sure.
go on their website, and they're now very transparent about that. So they're
That's-
probably, out there physically inspecting a lot of properties. But just know that if you are in Pierce County, there's an additional 10 days minimum going to be added to your transaction. Make sure that fits in line with your closing date, because there are people out there that
Yeah.
are recommending their clients sign a hold harmless and just close without the septic system.
And let's talk about that.
Yeah,
Don't ever, ever, ever sign a hold harmless regarding your septic system and close a transaction, in my opinion.
right. We've had some where the septic system wasn't even inspected in the first place, and somebody's being asked to hold harmless.
Yeah.
And so that means you're, washing your hands. You're not going to sue anybody.
Nobody
You're
can
not
sue
going to be
anybody.
upset.
Yeah.
Septic systems, they can be very expensive, and if you have
Very.
to put in a new one, depending on your system, could be $20,000, $30,000 or more.
Yeah, if you end up with one of those Glendons, I think they're called something different now, but the mound systems, more than that.
Yeah, yeah. So be very careful if anybody's asking you to sign a hold harmless waiver. Figure out why. Does it make sense? How much of a gambler are you? Some people
Yeah.
have different thresholds for comfort, right?
Yeah, I
But
think
be careful on that one.
I think the only time if you're desperate is if it's been inspected, the septic company gave it a green light, and it's a reputable septic company you've used before, and you're just waiting for the county, maybe. But oh boy, it still keeps me up at night.
I spoke to somebody at the county on a recent transaction, and they knew we were trying to close on Thursday, and they had been out and inspected the site. They just hadn't done their report yet, and they took vacation.
Oh, nice.
So
I mean,
no
everyone's-
RSS was issued till the following week.
Yeah.
And they knew.
Did you
I had spoken to the inspector in person.
Did you call him up in Maui and say, hey, do you remember this one?
Remember
Was
this
it good?
one? Any
Is there
chance
everything
you
good?
could sign this on your phone? Just get it done. So everything came back fine, but it's just, you're dealing with a third party that has a little bit of control on your timeline, so just be aware of that.
Yeah, okay. That's good to talk about that every once in a while. That's
think so.
one of those outliers. That
Well, if
doesn't
you're in
hit you.
King County, you're not used to that extra step. And so if you hop over the line and sell a property down here, then, that might be a surprise.
Yeah, King County still has the process, but they sort of let their inspectors kind of be the judge and jury, right? Is that the fair way to say
They
it?
very rarely will physically inspect a property because the King County area is so vast and
Yeah.
large that they don't have the manpower to
Right,
do it.
right. So they anoint their inspectors.
Yep.
Okay, the last one is contracts falling out at an inspection. We've seen more of this lately than ever.
Yes.
And why do you think that is?
I think there could be a number of reasons. Number one, the house could be falling over.
Yeah,
Let's assume that's not the case. I wonder sometimes if buyers' expectations are a little unrealistic about what the home inspection process is supposed to be. Our state looks at it as the buyer's first opportunity to really look under the hood, to really see how this home functions. And so it provides the buyer with a lot of leverage. It's one of the first opportunities the buyer has to exit the transaction. Oops, I found this out and I don't want to buy this house anymore. Okay,
Right.
that makes perfect
Fair
sense.
enough, right?
Yeah.
Yeah.
And usually the monsters live in the crawl space and in the attic.
Yeah,
The other
for
stuff
sure.
you can see when you're walking around, not always, but so that's kind of the game plan here. But we see a lot of transactions where it gets under contract, and then here comes the home inspection, and then the buyers, it's almost like they're expecting a perfect home. They'll have a laundry list of every little thing from a light switch that, seems a little wobbly, or a doorknob that squeaks, or, that kind of thing. So,
Yeah, you kind of know it's out there when it becomes a meme. I saw one the other day where it said basically the doorbell doesn't work, so now we're asking for a new heater, a new roof,
There you
and
go.
new siding.
Yeah.
And that's kind of what's happening.
Yeah, so I think there's been a lot of buyers that they say, hey, I'm paying this interest rate, and I'm paying top dollar for
I
these
think that's-
houses.
I think that's a
and
big part of it.
I don't, number one, I may not have money left over to do
Yeah.
some projects, but number two, I wonder if some real estate brokers out there aren't encouraging their clients, let's do whatever it takes to get the offer accepted, and we'll just hammer them on the home inspection.
And that is a legitimate strategy, but it's one that we should know about,
Yeah, so if you're a real estate broker out there, have a conversation with your buyer. Let them know what a home inspection looks like, what their options are for responses, and what the seller's options are and their reply to your request. Because the seller can just simply say no.
Yeah, how does that work? So I have a home inspection. I have a laundry list of things. I go back to you. You're the seller. And I say, I want you to do all these things. What are your options as a seller?
So as the seller, I have a couple different options. I have the option to say, no, I'm not going to do anything.
Yeah.
Second option is I can say, yes, I'll do everything. The third option is that I can say, well, how about if I do number 1 and number 4, but I'm not going to do number 2 and 3. And
Okay.
then the fourth option is, you know what, I don't want to do any of this. Let's come up with another plan. Usually that's some kind of financial
Like, I'll give you
consideration.
some bucks.
I'll give you some money towards your closing costs. That way you can fix these things after the house is yours, and you can have everything done to your standards.
Right.
So the seller has 4 possible responses to whatever the buyer asks for. Now, if the buyer says, hey, we're good with everything, then you don't have to go to step 2.
Right.
But the seller has options, and if the seller says, well, if the seller says anything other than, yes, we will do what you're asking, then the final step is it goes right back to the buyer. The buyer always has the final say.
And
And
it
the buyer
can't keep going back and forth, correct?
No, so
You only get that bite at the apple at the end for the
yeah,
buyer.
when it goes back to the buyer for that third step, that's on a 3 business day timeline.
Right.
And that does not repeat. So you have
Okay.
3 business days to figure out what your final solution is going to be. And of course, if you agree that you'll take 7 days, if everybody signs that and agrees to it, then it's 7 days. But it's
Right.
almost always 3 days. But it does not repeat itself. So that's when the buyer has the option to say, okay, we'll go with what the seller said. They can say, no, we're out of here. Then if you're not going to do all 4 of those things, we're out of here.
Right.
And then they get their deposit back because that's built into the paperwork. The third option there is that, okay, well, how about if you do number 1 and number 3 and skip number 2 and number 4? Because number 1 and 3 are more important to us. So you can go back and forth during that final 3-day period, but
Right.
it does not repeat. And here's the big thing. If you're a buyer and you're a buyer broker, if you miss that deadline, our deadline is 9 p.m., so let's figure out, let's say tonight is 9 p.m.
And
on
boy,
day 3.
have we seen a lot of people miss deadlines?
If you miss that deadline and you don't give final resolution to this inspection path, then you have waived your inspection and the seller isn't obligated to even fix the 2 things they said they would fix.
This is why people need to hire sharp brokers,
Right.
because we've had this happen. We've been on the other side of this where, hey, you missed your deadline.
Yeah.
You're going to have to go back to your buyer now and say, sorry, we missed our deadline.
Right.
You can't get any of these things that you asked the seller to do.
Exactly. And that doesn't feel good on our side of the table
No.
either when you're doing like gotcha.
Yeah, we don't wanna do that
The
either.
assumption here is that.
But we represent the seller.
Right.
We're not going to be like, hey, your deadline's in 1 hour.
Yeah,
That's
yeah.
not our job.
No.
We
So
represent the seller.
We're assuming that the other broker knows what they're doing. Now, that may be a bad assumption, but for the most part, a lot of them do. But if you don't, sit down and study your paperwork. We're kind of harping on paperwork, I guess, today. But
Well, you know.
you've got to know what your deadlines are so that you're protecting your client, whether you're on the selling side of the table or the buying side of the table. You've got to